Here is our moderator. She is an associate professor at the School of Risk and Actuarial Sciences at University of New South Wales. We met when she was previously at the Australian National University, and I was on sabbatical there. She's done an enormous amount of work on insurance AI and data-driven decision-making, focused on insurance and retirement income systems remaining fair, sustainable, and resilient amid technological and climate change. I'll leave anything further until I get to introduce her talk, but for the moment I will let her start off the panel.
Thanks, Giles. Hello, everyone. Firstly, big welcome to be here. This is, as our opening remarks just mentioned, this is a very important conversation to have, because I just checked this morning that the U.S. insurance industry accounts for 1.7 billion written premiums, and there are 3 million employees in the insurance industry in the U.S. alone. So this is such an important industry, and it touches up every single individual person's life, and everyone buy multiple insurance. But when we think about how much we have been doing research on insurance, researchers have been collaborating with the industry and the government. To be honest, it's a very under-researched area. So that's why I think this kind of workshop is probably one of the first of its kind worldwide. It's very important to happen. So I'm really grateful to Giles and to Wharton to make this possible. And thank you everyone for being here. And I hope throughout the day you engage with us actively, and we would love to hear your thoughts. And for the keynote panel discussion, let me first introduce our panelists. The first one is Philip Barlow. Philip is an Associate Commissioner in DC Department of Insurance. And especially in recent, I think if you search online, you will see that Philip's department, they have a recent market conduct examination on evaluating unintentional bias in private passenger automobile insurance. And this is a very interesting report, and there has been still some ongoing discussions. And we'll talk about that later in the panel. And the second guest is Ben Keys, Professor Ben Keys, from the Professor of Real Estate and Professor of Finance. Ben has done impressive work on credit scores, climate disaster insurance, and among the other topics he has been exploring, especially in real estate, credit. And also Ben and co-authors recently have a proposal for the U.S. Reinsurance proposal to potentially tackle the challenges of insurance affordability facing climate risks. And we have John Johansen, the practitioner in this panel. So John is a senior principal of Oliver Wyman. He is a tech strategist, translating C-suite priorities into practice tech, including implementing AI in insurance. And last but not least, we have Kevin Werbach, a professor here, a faculty lead at Wharton Accountable AI Lab. And Kevin has spent 3 decades exploring major trends in emerging tech, including legal and ethical aspects of AI. And Kevin brings expertise beyond the insurance to this panel. So thank you, everyone, for agreeing to be in this panel. As we can see that we deliberately make sure that everyone bring a different set of expertise to here. The reason is that when we face a difficult problem, we need multidisciplinary groups to help us solve it together. So that's why we want to have some genuine, authentic, and also multi-perspective opinions to this panel. Before we start, I want to warm up the stage by asking a question, but also if there's anything else that you want to introduce more of yourself, please do so. So the first question is, in one sentence, what is the most surprising thing you have learned about insurance? Who wants to start? Philip?
I'll start. I think the most surprising thing I've learned about insurance is that what people decide to insure. They seems like they decide to insure things that appear to have low risk and not insure things that have high risk.
Insurance literacy is very core, seems to be.
I'll go next. One of the things that I was surprised to learn about insurance is that it's almost organic in societies, organic in groups of people, that it's almost innate that people want to say, if your barn burns down, I'll help you rebuild it if you help me rebuild mine if mine burns down. And if we go back to the roots of insurance, this idea of risk sharing through communities, we're going to stand on the dock in London, and we're going to, if your ship's cargo suffers a loss, then I'll pay for that a little bit as long as you'll reciprocate. And I think kind of being at that root of, it's communal. It's this idea of a community coming together to help share risk. I think that's a really interesting place as an origin story for insurance.
Great. Good morning, everyone. I guess the place where I'll start is thinking about insurance as sort of essential financial infrastructure, and thinking about the functioning of the mortgage market and the housing market, which is where my focus is. Basically, if you can't get an insurance policy, you can't qualify for a mortgage. And the vast majority of home buyers are going to need a mortgage to pay for a house. And so, we have a $55 trillion housing market in the U.S. and about a $15 trillion mortgage market, and neither of those can function without a well-functioning insurance market. So I think understanding the ways in which that serves as an essential role in the process was one of the big discoveries for me.
And I'm going to say something challenging in a room full of insurance people. What surprised me is insurance is really interesting. It's fascinating, and it's really a microcosm for all the issues that we're dealing with in my world, looking at AI policy and governance and regulation, both the operational issues, the technical issues, as well as what we'll get into, some of these really hard conceptual ethics issues. It's all there. Insurance is really the place where the rubber has to meet the road. You've got to make decisions about coverage and underwriting and pricing and so forth. That really force us to be explicit about all the choices we're making. So, much deeper than I realized, which is partly why I'm here.
I will add my take as well, and it's quite different from Kevin's. That's the most surprising thing for me is that when I talk to people, ordinary people, when I say insurance, they always carry some negative feelings. And when I look on news, like insurance, by the word doesn't carry negative feeling at all. But all the news about the negative things about insurance, it's unaffordable, unavailable. The insurers are not doing very good things. So I think that's something surprising to me. I don't think that should be. That probably indicates there's something we need to be done to correct that. And I heard a quote that the best thing to cue a conversation in a cocktail party or in a barbecue is to talk about insurance. Okay, now we also want to understand more about you. So let's pull out the first audience poll. Is someone helping us? So we want to understand what concerns you most about the use of insurance, the use of AI in insurance. I want you to give us the answer.
Give us a second. We need to log in again because we didn't pull it up. We lost it.
Okay, maybe when we are setting this up, I can give you some quick heads up. It's about fairness or explainability or privacy. So which aspects do you concern the most about insurance? So in terms of using AI for insurance?
Maybe a show of hand, fair, transparency.
Yeah,
Anyone?
maybe by show of hands, who concerned more about fairness or bias and fairness in the use of AI? Most. Second one is transparency and explainability. Okay, we are having here. So, but in this one, you can only pick one. So we want to understand
Everyone see?
Scan the QR code, and you can only pick one. Of course, they are all concerned.
Lean out of the way.
Yeah, exactly. Yeah.
block, not concerned.
There's good ones on here. This is hard.
Yeah, it's 29 to 32 respond.
Okay. It seems that the biggest one is a lack of transparency and explainability. And then we also have the second one is bias and discrimination. And the third one is both privacy and lack of human insights. Okay, now, John, does this result surprise you, or is it consistent with your feeling about the concerns?
So it's consistent with not only the feelings that I might have, but it's what we're hearing from our clients.
Okay.
Is that exactly the kinds of things that we're looking at here? This explainability is a key area. We can't sit in front of someone and say, well, the price was the price because the AI told us. What we've got to be able to do is we've got to be able to leave what technologists like to call breadcrumbs. We've got to be able to go back and say, this is a process that we can see exactly how the price was arrived at, actually see how the process worked. And even this idea of human oversight, privacy and data use is a huge issue that we're hearing from our clients. I think the human oversight, what we're seeing is as people go and strive for automation gains, what they're trying to do is they're trying to say, okay, that's great, but it can't happen out of sight. It can't happen without a human in the loop. HITL is the first acronym I'll use today. The HITL is the important element in any of these, and even as an oversight, as an observer, as someone that's monitoring the process, that's what they're thinking about. And I think the last, in terms of privacy and data, this is an area where our clients are really struggling because they know that in order to get the best output from these models, we've got to share as much data as possible. And they're really wrestling with that because the models can be inherently leaky of data. Everyone understands you can't have a vendor training their model on your data. That's very leaky. But the models leak in less observable ways. So we absolutely see clients worried about that quite a bit.
Cool. So in your experience with working with so many insurers, what's the current landscape of using AI from your perspective? How they are using, what kinds of AI are they using, like the traditional machine learning or generative AI or AI agents? So what's the current landscape?
Well, in general, I feel like insurance entities are quite advanced users of data analytics tools. So, folks are using ML models and have been for probably the better part of a decade. And they know intuitively that they've got to be collecting the right information in order to drive some of those models. With AI, we see folks kind of going in very tiered kinds of structures. The first tier is, let's give everyone access to the desktop version of Microsoft Copilot, right? Microsoft is doing a great job of saying, I'm going to embody some amount of AI in each of the productivity tools that I'm sure we all use every day. That's kind of a lightweight, easy decision. You can buy that in a way that's going to be very data secure. We see a lot of folks experimenting, spinning up AI squads, AI SWAT teams, AI-focused teams that are doing experimentation. And again, that's kind of broadly across the board what we're seeing. Folks that are really making a difference with AI right now are actually pairing people that intuitively understand the business process, the analysis, the calculations, the algorithms, with people that are AI native. So people that live in AI tools. One of the stats I saw on the way in was that 60%, between 60 and 70% of people that use AI at work do so on their personal account. Now, first of all, we're talking about data security. That's a big data security challenge. But those are the kinds of people that are going to be the ones that are leading in these experiments. And we're seeing that the most successful experiments are the ones that are teaming up someone with really great domain knowledge, with that facility with the AI tools, and maybe we sprinkle in someone from a governance organization just to make sure things aren't going off the rails.
So clearly, I mean, I assume that different firms, they have different AI capabilities. Presumably larger firms have better AI expertise and also AI tools, but SMEs may have like weaker AI capabilities. Like, for example, for climate models, they may have access to different, accuracy or different models. So then, from an economic perspective, what does that imply?
Yeah, I think what we're seeing in the residential insurance market right now is this story of the haves and the have-nots when it comes to their modeling capabilities and their toolkits. And I think AI is only going to amplify that in certain ways. There's a really nice study by Judd Boomauer of UCSD and co-authors looking at the California wildfire challenges around insurance and how do we think about setting the right price in these areas. And one of the neat things that paper shows is this separation in the market between the more sophisticated insurers who have the more advanced wildfire modeling tools and techniques. They're collecting additional data fields to drive those models. And so they're able to cream skim. They're essentially able to go into what appears ex ante to be a risky part of the state and say, no, we have the tools to pick out who are the safe folks. And what that does is it leaves everyone else in a worse off position because they've taken the safest people. So the average risk of the pool is actually higher than it was before. And that means that everyone else who's not able to get that policy from State Farm is paying more. And so you have this heightening of this adverse selection problem in insurance. And we're going to talk a lot about information asymmetries and issues with who knows what. But competition can amplify that. And so I think that's one of the big takeaways from the work. And I think it's one of my concerns when thinking about when AI is being implemented. If in some versions the AI could be a great equalizer, right? You could bring up the level of the weakest teams, and we certainly see that in the classroom, where students have been delivering, in their group projects. There are a lot of B+ type group projects that are coming in these days. So it's bringing up that tail, and maybe that's a possible direction that AI will lead to. It might bring up the tail for some of those more limited insurers, especially if it is a very efficient way to model risk. But I think the other worry is it could go in the other direction, and it could amplify that adverse selection problem.
Yeah. So, Philip, having a practitioner sitting next to you, from the regulator's perspective, do you have any concern about people like John using AI?
Well, I guess I think John probably does a fine job of using it. But generally speaking, I think the concerns that I have about the use of AI as a regulator are the same that I have about people. Poor training and poor oversight leads to poor decisions, and I have a concern that the training and the oversight of AI models is unclear to people who are using them. Particularly, I think to what Ben said earlier, maybe it'll bring people up. Well, one of the things that I see a lot in the insurance world is companies that have an expertise doing stuff, and then the other companies that maybe don't have the same level of expertise try to copy what they are doing because they don't want to get left behind. And if you are copying the actions without understanding what you are doing, then that's the way that insurance companies get into trouble. So that's some of the concerns that I have. And it's hard, frankly, to pick out certain things to say because insurance companies believe are using AI for all kinds of things. I don't want to, in sort of immediate terms, I don't want somebody's claim to be denied or to be underpaid without a human looking at it. That kind of feels like sort of a minimum standard. And how do you determine if a claim is underpaid? It's easy to say denied. Underpaid is a harder thing to say. So I have concern about that. But then that's an individual kind of thing. But is that a bigger concern than using AI in pricing? And you wind up charging everybody too much. So I'm worried about everything. Everything I want to, but what I want is for the training and the supervision to be there and to be understood and to be explainable to me as a regulator.
So do you concerned about what Ben mentioned about the competition side, or the big players and the weaker players?
Well, that's what I was saying. I see lots of big companies are able to fully explain exactly what they're doing, give us some understanding of the whys and the analysis that they've done to do it, and but as it filters down to smaller companies, I see this in my job every day. We're a small department in the District of Columbia. We don't have a whole lot of people. I think California has more actuaries than we got staff. So I see it from our side too, but I don't, as things filter down, to companies with less expertise, that's where you're going to see the problems.
Yeah. So is there a way that we can potentially mitigate the problem, or from the regulator's perspective?
We frankly, as regulators, struggle with that all the time. We really can't set one set of standards for the companies that do things right, and a different set of standards for everybody else. That doesn't work as a regulator. So we kind of have to come up with rules that work. That are targeted at the worst performers, not the best performers. So there's just I don't think there's any way. Maybe AI will fix that for us, but I don't. But we still have to set standards to prevent the bad things from happening, even if it means extra work for the companies who are able to do it right.
Yeah. So, Kevin, after hearing all this conversation about the insurance, I know that you have done lots of work beyond the insurance and also generally about ethical AI governance. Mm-hmm. So, is there any comments you want to offer from your end? What's the future of AI governance or ethical AI? Yeah.
Well, that's a big question, but I'll start with what I said again. Insurance is really interesting, and again, this highlights it. These are all issues that we're dealing with across every sector with AI, but the insurance context forces choices, because you have to make a decision at all of these stages, and forces surfacing a lot of these rationales, in part through the regulatory process. And AI governance in general, we started about 10 years ago. I started teaching the class that's now required for our AI major on legal and ethical issues. I started teaching it in 2016. And back then, we were focused on these ethical concerns. Oh my God, facial recognition systems have differential accuracy based on race and gender. That's a problem. And we started seeing all these issues that were problems. But the difficulty was the students would push back on me and say, yeah, I see that's a problem. What do we do about it? How do we make decisions? And then we quickly ran into contexts like the famous ProPublica article about the North Point compass system for predicting recidivism in making parole decisions. And there it became clear that there's a choice that has to get made. So we all agree discrimination is bad. And so the idea that you may be, as a prisoner, where a judge is going to decide you get released early on parole, if that's a racially biased decision, we all agree that's bad. That's unethical, that's illegal, and so forth. But what's a racially biased decision? In that case, famously, if you do a demographic parity analysis, you look in aggregate at white and black prisoners, what the results are, you see a great disparity. But North Point said, no, that's not the right standard. We did a calibration analysis where they looked at every risk score, whether that was accurately predicting risk, and then disambiguated it by race. They said we're not biased. And it very quickly became clear, John Kleinberg and others did the research that showed those are incommensurable standards for that data set. That basically you cannot optimize for both that individual and that group fairness because of differences in the base rates in the population and so forth. One particular example, but what that said is we have to make a choice. And so then the challenge of AI governance is, well, how do we do that? So the process really moved to a lot of formalization. The first stage was servicing these ethical issues. The second stage was trying to define governance structures, the epitome of which is the EU AI Act, which is mostly entered into force, which said, okay, you've got to have an AI governance risk management process. You've got to do testing. You've got to do various disclosures. You've got to do bias mitigations, all these very detailed requirements. But the problem is you can invest a lot of time and money in process and not really address the issues. And even just having a process still begs the question, all right, what exactly does bias mitigation mean? How actually do you make some of these choices where you've got the kinds of problems that everyone has talked about, where there's no perfect system? Everything is going to be balanced in terms of its effects. And it's dynamic for some of the things, for example, that Ben talked about. People will respond and that will change the market. And so now we're kind of in a process at a point where it seemed like this was all going to go in that direction. Similar to what we had for privacy, Europe passed GDPR, the General Data Protection Regulation, and really other than the US, every country in the world put something similar into place. The US effectively has that because California has a similar law and multinationals comply. And so now we have this kind of structural response to privacy. It's not particularly great, by the way, about actually addressing consumer privacy that people care about, but that's the process. Seemed like AI was going to be something similar, and then we sort of walked off a cliff, partly because of the recognition that these hard questions require a lot more understanding about how do you make trade-offs, what are best practices, what does it actually mean at a micro level, and partly because we have this huge political pushback, not just from the Trump administration, saying, well, wait a minute, AI is changing the world. And if we're spending all of our time on this process, we're going to lose the innovation and the potential of it. So right now, we're kind of in this very uncertain period, really, with AI governance in general. The issues are more important than ever. The public recognition of the issues is way more important than ever. This pushback against AI is huge and has really exploded in the last year or so. But we don't really have a clear legal and regulatory path forward. So I'm actually hoping for all of you to help us more broadly, because again, insurance is a forcing factor. Litigation, especially in the U.S., is a huge growth area around AI. These cases are going to get decided. They're going to push companies to act in the shadow of that liability risk. They're going to push companies to want to insure against that liability risk. And Dan Schwartz is here to tell us about how liability and litigation are not going to solve these ethical problems. He's written about that. But I think we're not going to be able to get away from the need to answer the questions in the insurance context to help us deal with the broader AI governance problem.
Very interesting. So if there's like a quick suggestion for the practitioners in this room who want to have like AI governance or ethics, ready, is there like quick tips that you want them to look at?
Oh, yeah, I mean, again, most of you probably, but you start with the NIST AI risk management framework, which came out of the Biden administration, but is a general sort of frame about do all the following things here, ask all these questions as a starting point. If you at least looked at that, you've got your general bases covered, but with the caveats I described.
Yeah. And also I want to follow Kevin's earlier points about the bias and the potential discrimination problem. So I think that's especially a very important discussion we need to have for the insurance industry. And Philip, your department have like a recent report on that. Do you want to have a quick introduction of what's that?
Sure. So we did a study to look at whether there was unintentional bias in auto insurance. One of the things that we quickly heard from the insurance companies, because they saw they would see, these reports that would come out that looked at the differences in premiums, and they said, but you can't just look at the premiums, you have to look at the claims also. So being a regulator, we could get that information. I think it's hard for most people to get it, but we were able to get it because we told them to get it. So we looked at, generally speaking, we found in the District of Columbia that premiums for Black and Hispanic drivers were much higher than other drivers, but the claims were even higher. The difference in claims was even higher. So, and frankly, we got to that point, and the insurance companies tried to tell me, okay, see, you should be done. And I'm like, well, that may be, that's useful information to know, but I don't think we're done because, so now we are currently looking at, we're currently doing some things. One of the things that we are trying to do, because as I say, you can't get the premiums in line until you get the claims in line. So we're trying to do we currently have a data call out to get information to see if we can glean any insights as to why the claims are different by race. What kind of claims, where they happen, stuff like that, to see if we can make. I'm cautiously optimistic that we will discover some things that enable us to narrow that difference. But even with that, we still want to look at the premiums, and just because you've identified some things that come up with that are good predictors of risk. If they're also predictors of race, I really want to take a harder look at those. So that's some of the work that we are continuing to do now to look at that.
Yeah, in terms of the proxy discrimination or which variables are potentially carrying those proxy effects that you are looking at, I know that Ben has done some work on credit score and insurance. So what's your finding in that research?
Yeah, so I've been working with a team of researchers, some at the Philly Fed. One of my co-authors is here today, others at the Federal Reserve in Washington, and another co-author at the University of Wisconsin. And we've been looking at the determinants of insurance pricing for households, property insurance, not just looking at the disaster risk, but also looking at the people. And sort of thinking about places versus people, and thinking about how insurers set price. And for the majority of the distribution of risks out there, actually your credit score matters more than your disaster risk. And I don't think people are aware of this. I think a lot of people know that their auto insurance is a function of their credit score, but I think many fewer homeowners know that their price is very strongly determined by their credit score. I think there's a number of challenges that we have in studying this. One is that we don't have Philip's power to obtain claims data yet. We don't have that power yet, I guess. Maybe there will be some lawsuits or other things that will kind of bring some of that data to light, but we don't have the claims data to sort of do the same exercise to kind of validate the pricing. And I think there are a few different concerns related to this. So one would just be from a pricing standpoint, whether that is actually an accurate reflection of risk, or whether it instead reflects different competitive practices, different business decisions. Some households may be less informed about how insurance works. They may not shop around as much. So there may be sort of differences in terms of pricing power, or in terms of some of the other benefits that higher credit score households might use through bundling or other kinds of features. And there's another piece to it, which is related to this discrimination story. So recent data has found that the average African American household has about 100-point credit score difference relative to the average white household in the U.S. And when we think about the effects that is then going to have on the cost of home ownership, where not only are you paying a higher interest rate on the mortgage because you have a lower credit score, but you're also paying substantially more for insurance, we find that that's essentially like a double whammy when it comes to the affordability challenges that lower credit score households face. So I think that this work is just a start in trying to better understand this set of challenges, and hopefully we can do more, especially if we can get our hands on a bit more data.
So, Philip, do you think you can share the data?
No.
That's what we've heard.
Okay, John, do you think insurers, they care about, or they deliberately look at the potential proxy discrimination or bias issue? Do they have a genuine concern about that themselves, the insurers?
Emphatically, yes. I think, and it comes really from probably a couple different dimensions. I think one of the dimensions is they're trying to run ethical businesses, right? And they realize that, you know, the things that might skew the results that they could use, they work very hard to stay away from the kinds of discrimination that we've been talking about. Again, mostly because they want to run ethical businesses. But there's also been some negative reinforcement on events that where it has happened. And you know, so regulators look at those things, attorneys look at those things, and that creates that sort of cycle that says, wow, there's really no economic value in trying to skirt the system. The system is going to exert itself in the right way. And I think it's one of the things that insurers are very worried about as they dip their toe into these models around using AI in line to price. I was working with an insurer in your hometown, and we were talking about them moving from a pricing algorithm that was very kind of deterministic and was within this one engine, and they really wanted to think about how they could throw the switch to do something that was more AI oriented. And we were talking to them about the kinds of things that they can do to mitigate that risk, and it really had to do a lot with transparency and explainability. What we were working with them on is, well, whenever a technologist says the word operating system, everyone always thinks of the latest version of Windows. But when I say operating system, what I'm thinking of is almost a way of working. So what we were talking to them about doing is changing their way of working to create more transparency than is normal in an ML process or an AI process. To actually capture things like, this is what we asked the AI, this is the answer it gave us, and to keep those things in a way that we could go back later and we could say, here's the outcomes that we got, here's the things that we want to make sure we're keeping track of. So really increasing the visibility of those things or quite dramatically. And I think that goes a long way toward giving them comfort that throwing that switch someday, they haven't thrown the switch, because one of the other things that we wanted to kind of counsel them to do was to create this operating model and then run it in parallel for a while to be able to see and quantify, here's where we got to real differences in outcome, and how do we explain those things in a way? And how do we make sure we have the information to explain them? Because, again, they want to be an ethical insurer. So they're trying to say exactly, here's the way we're going to have our operating model support that, and that we can be comfortable we're not doing something that's unfair to the market.
Okay, now we have, thanks John, we have here the practitioner's view, regulator. Do you agree?
So,
based on your observations.
I knew there was a reason they sat us next to each other.
I will point out that besides us, there is another group that has all of the relevant data to do the same kind of analysis that we did, and that's the insurance companies themselves. And I've never seen an insurance company, if they're doing them, they're keeping them secret. So the insurance companies, if they really wanted to, they could do more work on their own to look at the same kind of stuff that we're looking at. So until they start doing that, then I will say there's more they can do.
Yeah. Or if the insurer want to collaborate with people like Ben or me to let's look at that together, that's also a sign, right?
Yes,
so,
yes.
Please think about sharing the data. Okay, now I need the second poll. So now we have talked about AI. Now we want to transit to a second topic. It's about climate disaster insurance, affordability. So I think in the insurance space, if I want to pick up two keywords, what's the two biggest challenges? One is AI, one is climate. So now we want to talk about climate in the second half. if you can let us know if insurance becomes unaffordable because of increasing climate risk, what is the most appropriate response? One of them is like risk-based pricing, that homeowners take care of the responsibility, or governments should subsidize premiums, or insurers should be responsible for that, or a shared public-private solution.
What I really like is the insurance, the third one.
The insurers are winning here.
So we can see that we almost have similar votes between homeowners take care of the risk-based premium. That means homeowners are responsible for their own risk. And the shared public-private solution, I think these two are almost the same. And then the government should subsidize is the second one. And then there's no focus for insurers.
Yeah.
That has
I
nothing
think
to
we
do with
might have a
population.
biased sample.
Yeah.
So Ben, you have been doing this. So firstly, can you comment on the results? Is that it's surprising me, given that this is a biased sample?
Yeah, I mean, I'm a little surprised that that people were so interested in having the government get more involved in this industry. One of the surprises for me, coming back to your opening question, was just how involved the government already is in insurance markets, and this idea of, oh, we should let the market decide is really a myth when it comes to property insurance markets. These are heavily regulated markets where in most states insurers need to file on a very regular basis any changes that they're making to their pricing. It's also a market where we've seen really an enormous increase in the dependency of households on state governments in the form of their residual markets, these state fair plans, as an insurer of last resort. So when there's no private insurer who's willing to offer a policy, we've seen a dramatic increase in the number of households, especially in places like Florida and California. California now has over 600,000 households that are on the state fair plan. So they can't find private insurance, and that's more than quadrupled since 2019. So we're already in this world of a shared public-private solution. Again, it's because we need insurance to get a mortgage. We need mortgages to buy houses, and so the functioning of those markets is severely hampered if there are that many people that can't find insurance. Where my thinking has gone on this in really just the last kind of 2 years has been thinking about whether this design working at the state level is the right approach or not. These are entities that were created, actually many of them created in the 1960s out of challenges around finding insurance policies for urban communities that were facing threats of arson and riots in that era. And it was meant to be a Band-Aid on these markets, that you would kind of lose your insurer and another insurer would come along quite quickly, maybe a few months later, and it was just so that you wouldn't have any interruption in your coverage. And instead, they've become some of the largest insurers in these states. And so whether that design is a good one when it comes to risk sharing, but also when it comes to sort of the politics of setting the prices right, and when you're facing the voters in the state, the challenge is to be willing to set those risk-based premiums. And that's my worry with the FAIR plans, is that there's a temptation, as there is in so many things, to kick the can down the road and to undercharge for the risk, so you're not setting risk-based premiums. And that's a lesson that we've learned from the National Flood Insurance Program in the U.S., which has had decades of mispriced, underpriced policies and has created enormous budget deficits, but it's also set up bad incentives for where people live and where they rebuild. And so trying to improve on that was sort of the motivation for our proposal for a federal reinsurance entity that would move the decision-making one step away from the states, which seemed like a good step, but also one step away from the consumer. And so there might be a little bit more room for a government entity to set more realistic risk-based prices. So that's kind of the short overview of it. The devil's, of course, in the details of how you put something like this together. But yeah, my vote would be for a blend of the two most popular elements.
Since we have very sensible audience. So is there, I mean, in terms of climate disaster insurance, is there an interaction between AI and the climate risks? Any, John?
Absolutely, there is, and I'm gonna make an announcement here. I live in Florida, so I'm experiencing a lot of the choices on the board here myself. But there's absolutely an ability to think more granularly about the risk, and I think that AI tools are helping us kind of add granularity to some of those models. But I also think, and this can be AI, this can be machine learning, this is just more kind of advanced analytics, are helping some of the folks that are in this bucket, these property owners, make better decisions around hardening their properties. How do I create within my own microeconomic model, my own family, a way that I can eliminate claims from my property? And I think we're starting to see insurers are reacting to that. There's a couple of MGAs that have sprung up to really focus on that down in Florida, that here's a punch list of things that you can do to make sure your property is hardened and you're not going to have a claim in what would be a run-of-the-mill sort of storm that might hit Florida. Or an earthquake that might hit Florida, which happened yesterday. Who knew? I don't think there's any property loss from the earthquake. But the AI models are adding a layer of both planning and they're adding a layer of granularity into the analytics that are helping insurers better match and better game plan out with customers the kinds of things they can do to kind of eliminate claims from more prevalent kinds of events.
Yeah, so it seems that there's a tension between having AI, we have a better prediction accuracy and better efficiency, but also potentially could price out some of the customers. So, Philip, I know that DC does not have like huge climate risk, but is there like any regulatory thinking behind this tension?
So yeah, I think it's. I look at it. There are people who live in places that are at risk because they can find no place else to live. Mm-hmm. And there are people who voluntarily, because of the scenery or, whatever, build places to live in places that have climate risk to them. And I think, you have to look at those two things differently and decide how you want to deal with it. It's always a struggle, how you segregate the market, because if you let somebody cherry pick all the good risks, then everybody else is equally bad. But I don't think the solution to that is to stop underwriting and charge everybody the same thing. So you have to kind of figure out a way to balance those two things, and so it seems like to me that that should be up to the community to decide how they want to balance those risks. I don't think it's really a regulatory issue. I don't think it's an actuarial issue. I think it's a policy issue, and so I think it's incumbent upon people with knowledge to be able to explain it to the legislators. Here are the trade-offs of doing what you want to do, and then let the community decide how they want to do it.
Yeah. So Kevin, after hearing this, do you think insurance is interesting?
No, absolutely. But I'll pick off on that last point. It's interesting because we start with these very data-driven, precise determinations, and and the question is, how much do you want to individualize the decision-making? And then you get to the end point of saying, well, wait a minute, that works fine for the people over here, but the people over here get upset. And sometimes people over here get upset because, yeah, I have a beautiful home in California, and what do you mean I can't get insurance? And sometimes we say, well, as a society, we're troubled by these outcomes. The problem is then we ultimately are in the realm of policy decisions, which are basically political decisions. And our political system is broken. None of us has any faith that we could say, well, let's have Congress pass a law. Right, you're laughing, and that's the reality of America today. This is not on either political side. This is the practical reality. Those are the institutions that we've created to make these decisions at a societal level, where there have to be trade-offs. But we live at a time in America where that's really hard to do. So the question, in addition to fixing our politics, which is a great challenge certainly for all of us, is what can be done outside of that if we take that as a given? And I think some of these ideas that people have talked about, are steps in that direction, but they're going to be imperfect inherently, because you're going to have different interests, and ultimately it goes back to where John started. This whole activity of insurance is about mutualization at some level. But that inherently means someone is going to get a worse deal than they would if either they didn't insure or if they were just getting a purely individualized rate for just them. And we have to accept that at some level, but that's really hard to do right now.
And also another thing that the regulators and also consumers are really concerned about is explainability or transparency. Why my premium is higher than my neighbors, or why my premium has increased by 30% this year than last year. So, I mean, with AI, it's getting even harder to explain things. So, Kevin, based on your experience with AI regulation, across different sectors, how people deal with this explainability or transparency issues?
We need to be more precise about what we mean by explainability. I talk about it as transparency, and there are different levels. One level is, is an AI system actually being used to make that decision? And intuitively, people want to know. People want to say that chatbot is AI, that's not a human being. People want to understand that. But then when you push on them, why do they really want to know? Well, I'm not comfortable. Well, if the AI gives you really, really good answers, why do you care? And if there's some escalation to a human, why do you care? People have a very strong intuitive feeling about it. That's the one everyone agrees on, but then you actually push on it, it's not even clear what that means. There's a lot of regulation requiring that kind of disclosure. Then we get into the question about, do you understand what that AI system is? What is the data that it's trained on? What are the attributes of that model? What do we understand? What's the performance characteristics? What's the model card and the system card? That seems very clear why that would be valuable. Consumers don't want that. They can't really understand. Maybe there's some room for some kind of nutrition label, but even that gets really hard to do given how fast AI is moving. Then there's what people really say they want, which is interpretability, which is tell me why. But as anyone knows, been in this field, we've been doing this in credit for 50 years. You can come up with a framework for traditional machine learning, but there's going to be a trade-off there. There's going to be a trade-off on accuracy and potentially on fairness, and we've got to decide. Well, okay, here's the explanation. The explanation is people like you tend to have more accidents, and that's when an insurer should care that there's more accidents. But well, no, I don't think that people like me should inherently have to pay more because of some immutable characteristics. So we don't get the answer there. And then we get into generative AI, and it all blows up because they're non-deterministic systems, and you are limited in terms of how much you can say that. So we've come up with various stopgaps. There's been a lot of good work done on counterfactuals where you can't actually explain why, but what you really want to know is just convince me that it wasn't my race or gender that was the primary reason. Well, we can sort of get to that, but again, it gets harder as we get to more of these generative systems to even do that.
Ben, do you have any opinions on this?
Yeah, just to follow on to Kevin's excellent points there, I think there's lessons to be learned from other countries in this regard. And, we have this idea that we have 50 different states that are all doing their famous laboratory experiments, but there are a lot of countries that are way far ahead of us in just getting some of the basics. So the UK is my favorite example here, where they have a requirement for property insurance that's a 2-page plain English description of what's covered by your policy and why is the pricing the way it is. And if you Google this and you take a look at an example of it, it's so easy to read. I mean, it's like a 6th grade, my 6th grader could read it and understand, what they're paying for and what the risks are of your property. And the fact that we haven't done this is I got too excited there. It's a really easy policy to implement. I think when insurers have been very reluctant to look at other segments of the financial marketplace as well. If you look at the disclosures on a HUD-1 when you buy a house, if you look at the Schumer box for credit cards, there's just basic blocking and tackling that we know that can be quite effective to give people information at the time of purchase. And the insurance industry has been resistant to doing that voluntarily, and there are really no states that have gone to that point. But it's an easy one, and I think it's all the more essential once you layer in, trying to explain what a more complicated algorithm is delivering when it comes to setting prices.
And at the risk of being the AI cheerleader here, insurers in the U.S. where there's no law for that are going to find themselves answering those questions more and more because everyone's going to take their policy and they're going to show it to their AI engine of choice,
yes.
And it's going to
say
create,
write me a 2-page,
2-page, two-page summary that a 6th grader could read, and it's going to create this cycle of that's going to democratize the information and the analysis. So it'll be interesting to see how that dynamic plays out. Because I know I do that all the time. I get a doctor's report and I scan it and all the things, and I say, explain this to me like I am not a medical professional.
We get more and more insurance complaints every day that are clearly written by AI. Sure. They're far more detailed than the complaints that we would get prior to this. So, asking a lot more questions, bringing a lot more information. So, that's something that's going to continue to happen through all sides of this.
Everyone's heard about the M-dash problem with AI, right? Is that the M-dash is a dead giveaway for an AI-generated answer.
So, Philip, but does the regulators have specific requirements on, say, if consumers ask why you must provide these answers? Is that something?
So, it's very hard to give a cut and dried answer to some of this stuff because with personal lines coverage, homeowner, auto, things like that, insurers can re-underwrite every year, and so there's no way for us as a regulator to be able to tell an individual consumer that their increase was this because of X. We just can't. We just don't have the information to do that because we don't know how that. But we don't see this so much anymore. But we used to get people that would ask us, about their rate increase, and we'd go back to the insurance companies and they would, they could show us using rate filings that we'd approved. This is how they went from there to there, and we'd explain it to people. I don't know that it helped, but they say they want to know why their rate went up. But that's not really. They really just don't want their rate to go up. So explaining why it went up is not overly helpful.
Yeah, I can only see this issue gonna be more and more difficult given when people use generative AI more and AI agents. This explanation can only be harder and harder.
Yes.
Okay, before we go to open the question to the audience, we have 2 final questions. The first one is, for each panelist, what is the single biggest challenge you think is for the insurance industry in the next 5 or 10 years?
The biggest I think we're touching on it. It's going to be, we're moving into a whole new world where things that we've done in the past are going to be upended. You're no longer going to be limited by the same constraints that we have been, and so it's going to be tough on us as regulators, as insurance companies, do increasingly complex things. I mean, we get rate filings for auto, mostly auto. Is some not as much on homeowners. Take 10,000 pages. Explaining what they're doing, and we've got 2 people who review those things, and so
And now you got AI.
yeah. So it's things are just getting more and more complicated, and making sure that they adhere to the principles that we would all like to have our insurance adhere to is just going to be tough.
I think one of the key challenges is going to be that the environment really favors agility. It really favors organizations that are going to be able to change and adapt. And I think this is going to be one of those areas where organizations, we hear a lot about a K-shaped economy, where there's kind of a bar that goes up for businesses right now, and there's a bar that goes down. And what's happening is that those that are good are getting better. Those that are not as good are getting worse, and it feels like a moment that is going to exacerbate that, and that the organizations that are really good at changing and adapting and have those muscles to actually make their organizations pivot, they're going to be rewarded in ways that are amplified, and it really creates urgency for organizations that can look at themselves and maybe they don't give themselves the full bottom part of the K, but if they're saying we're kind of flattish, we're not getting better, that's I think going to be those folks are going to be challenged, and they're going to have a really tough agenda to work through. And there's also a manifestation of that, which is we're seeing, as we're working with teams around the world, we're seeing K-shapes in terms of how people are effective, and that those that are already effective are embracing some of these AI tools and are getting more effective. Those teams are embracing and getting more effective. And organizations, we see organizations investing in their teams, in their training, in AI literacy, in pushing out more advanced tools, even in ways that might make the security teams a little less comfortable, not uncomfortable, but a little less comfortable. And because they want to make sure that they're raising their teams to be on that kind of rising line in a K-shape as well. And I think that's what we're seeing is that this is going to challenge organizations in new and different ways that might look and feel like things and challenges we've dealt with before, but the pace is really going to tax any organization. I think that's really what folks are thinking about.
Ben?
Yeah, I guess I'll pivot a bit back to the question here on climate risk and thinking about these twin tensions of affordability and availability. And I think as we look at increased climate risk, the intuitive response to that is to simply let property owners pay what the price is. And I think the challenge there is an idea that you can bring over from the health insurance literature, which is risk reclassification. So we say, well, your insurance should reflect your risk, but if you get a sudden cancer diagnosis, we don't want your insurance costs to go up your premium go up 80-fold. And so we all kind of accept that healthier, younger people are going to pay a little bit more, and older, sicker people are going to pay a little bit less, and we're going to pool those risks together, coming back to some of these earlier ideas. And we're comfortable with that in a society sense because most people are going to start out young and end up old. And so you're going to get both the benefits and the costs of that pooling. That's not the case for property insurance. The Florida residents are not going to all suddenly live in North Dakota and then switch places again. And so you don't have that same sort of pooling across your lifetime. And so I think that's going to create kind of increased tensions, both across states and within states, for a willingness to share in some of those burdens and say, well, no, the people who live there should pay the right price, even when the right price is changing very, very rapidly, and I think that's going to kind of lead to additional political challenges in the coming years.
One thing is just this inherent tension of the public and the private, which several people have spoken to. It's also a regulatory tension that these different sectors are regulated differently. But I'll also talk about just the catastrophic risk that is lurking out there. Climate is one piece of it. We just don't deal well with tail risk. But AI safety, we're now seeing this. The cyber risks of things like Anthropic's Mythos have really put this squarely on the agenda. There are big risks out now. AI is extraordinary. It's wonderful. It's beneficial. I'm a huge cheerleader for it. But we need to recognize there are huge risks out there where it's hard to understand how we insure against them. But we've got to address that.
The last question for each panelist is so we can see that we have practitioners, regulators, and academics in this room. So we want to figure out what's the right problem for us to work on together. Potentially, insurers are waiting to share data sets. Or what kinds of problem is suitable for us to work on together? And also, what we want to work on your pain points, the biggest challenges.
So one of the things that I'm frustrated that insurance seems to be getting away from is risk mitigation. I would like to, I could improve my credit score. I could start paying all my bills and improve my credit score, but that doesn't make me a better driver. And so I think that it would be good for the insurance industry to refocus we on risk mitigation and things that could be done to help reduce risk, so that we have everybody will be better off. The insurance companies, the insureds, everybody, if there's fewer claims. And I think somebody was talking about making the houses more resilient. All of that stuff. I feel like the insurance industry could do more, could get back to doing more to push things in that direction.
I totally agree. I'm a firm believer that insurance industry is not only just a risk transfer industry. It should also be a risk mitigation or risk awareness, and also raise the risk awareness of the policyholders, right? So currently, I know Olivia did lots of work on financial literacy, but insurance literacy is also extremely low. I think insurers really need to do more in this space, telling people what kinds of things are risky, living where is risky, and how can they do things to reduce the risk. And then it's come back to the question of we need more explainability to get them to know that do this reduce your premium, because they need the incentive.
So I think insurers would be well served by really focusing on elevating the skills of their entire teams to really leverage these tools safely and responsibly. And we are seeing folks beginning to invest in kind of broad-based AI literacy. I also think that the folks that are really thinking about this in a forward-thinking way are trying to harness the kinds of things that actuaries do. Because actuaries inherently exist to create trust in outcomes. And they exist and they're trained and they've got skills and techniques to do that. And spreading that sort of problem solving, spreading that sort of rigor as part of their AI literacy programs presents a unique opportunity at kind of this moment in time to both have broaden the skill set that's looking at information, building more trust in the results that the entire organization is able to create, and really just upskilling their workforces in innovative ways.
I guess two quick perspectives on this. So one would be from a research standpoint and thinking about where we are in understanding some of these challenges, especially in the property insurance space. I think we're in the very first inning of that. I think we've been hindered by data limitations first and foremost, and it's only in the last few years that we've seen some data sets come online, and I think that is going to transform our understanding of these markets in the coming years. I'm especially excited by a couple of the young researchers who are here, who you'll hear from later today, in Adam and Pari. But I think the way forward there is with more partnerships between researchers and industry and researchers and policy makers to share data and to share insights. More generally, I think the tension for me is related to this chain between the insurance industry, the mortgage market, and the housing market. And when I think of this mitigation piece, I actually don't think that the insurance industry is the place to do mitigation, because I think insurers are writing one-year contracts. And we've seen as they have moved in and out of markets that they are very flexible and nimble and might not be there next year. And so when you think about their willingness to offer steep discounts for investing in mitigation and things like that on a one-year obligation, I see sort of a fundamental tension there that is difficult to resolve unless you're going to write longer-term contracts. And I actually think that the place where there needs to be more discussion is at the intersection, I guess, of the insurance market and the mortgage market. When you have a 30-year obligation to a property, you have far more incentive to manage the risks effectively and to invest in resilience. And you could see mortgage-financed mitigation efforts being much more, I think, sort of intuitive in the sense of you already are used to making these kinds of payments, and you actually better align some of the incentives. So I'd like to see a lot more work at the intersection of the mortgage market and the insurance market going forward.
I agree the interrelationship between mortgage and insurance is very important. But I slightly disagree that the risk mitigation part, even though we are writing one-year contract, I think lots of them are renewing. So you see a big proportion of renewing customers, and lots of people they just automatically renew. Actually, because of their insurance literacy is so low, they don't shop around. They just keep it going for many years. So and also when I talk to some insurers, they are very interested they want their customers to reduce the risk, because that's a win-win. They can reduce the claims cost. So I think there's still a motivation for the insurers.
Yeah, in the areas that I work on AI governance and accountability, we need the development of an AI liability insurance market, but it has to work better than the cyber insurance market, which is the closest analog.
Okay, now let's open the floor. Dan?
Yeah, it's a great panel. So I have lots of questions and thoughts, but I guess I just want to sort of structure them. I think one thing that maybe there needs to be more attention to are the details of legal and regulatory regimes and how much they structure some of these things. So I just want to give a few examples and throw them out. So for instance, Ben, I totally agree we need more transparency about insurance policies. But the reason why there's more transparency in the UK and not in the US is because in the UK they legally mandate a standardized insurance policy. In the US, we actually don't have, people think we have a standardized policy. We don't. We have a standardized fire insurance policy. I mean, every insurer has a different policy. That's a legal and regulatory choice. In fact, we used to have a standard fire insurance policy. Much easier to have a standardized disclosure if you have a standardized policy. And so the legal details, or for instance, in bias and discrimination. These questions are incredibly slippery, in part because regulators and lawmakers have refused to define with any specificity what proxy discrimination actually is. That is a term you will hear thrown out. So, and it's actually, in my mind, and I'll talk about this later on, not that hard to do. In fact, I think there's some very good economics literature out there, some legal literature about defining proxy discrimination as the use of facially neutral characteristics that derive their predictive value from suspect characteristics. We have the answers. And so what I would encourage, and this is sort of obviously self-interested, is more collaborations that include sort of law professors and people in sort of the minutia of the law and regulation, because it's very hard, as you know, to change the fundamental structure of risk sharing. It turns out if you have enough sustained attention from, you can actually get some changes passed at the more sort of detailed level that they can facilitate broader changes, like in fair plan structures. That's another one. So, I'll talk more about this later on, but I'm just curious about your thoughts about more micro level changes in law, whether it's how we define unfair discrimination in insurance, and do we need better definitions, our processes for approving, do we really want state insurance regulators to be looking at 10,000-page forms? Is that really the right way to be regulating this stuff? So I'd love to hear some thoughts about like micro-level ways of thinking about reforms that are maybe more tractable that could help solve some of the challenges that you all have been talking about.
So I'll say that we have legislation that's been drafted to look at telematics. It's designed to encourage, it's not to regulate telematics, but to encourage the use of telematics. In there, and it was written by AI, in there I have a definition of proxy discrimination that got a lot of pushback. So maybe you can take a look at it and help provide some guidance on that. But I'll say I'm a life insurance actuary by background, so that's what I know more than I pretend when I do property and casualty stuff. But it's long frustrated me that life insurance policies are as complicated as they are. I think a life insurance policy should be front and the back of a piece of paper, and it's probably harder to do that for homeowners and auto and things like that. But I would love to have much simpler policy forms.
And also later, Malika will have like a session specifically on the different definitions. Malika, do you have any quick response?
No, I'll save it.
Same feeling.
Yes.
So I kind of want to push back on this explainability thing, right? It seems like from what Philip is saying that insurance companies, ostensibly now, right? Like this is being framed as we have more explainability now, but with AI we'll have less, right? And even with the current degree of explainability that we have, it seems like regulators aren't really seeing the explanations. I know as a customer, I don't see the explanations for pricing. So, why is this, arguably a desired characteristic when insurance companies don't seem to be doing anything productive with the explanations that they already have, right? What is the point?
Joel, from a practitioner, insurer's perspective.
Yeah, I actually think we've talked in the room about the point. I think the example in the UK property policies is a great one. People inherently do want to know, and there is we've also had the conversation about the high renewal rates, and people just kind of renew by automatically. So it's one of these things where if the market is asking loudly enough, if the regulatory regimes kind of embrace some of those things, the insurers will provide that information, and frankly, from a technologist's perspective, they have more tools today to provide it than they've ever had. And they also have the tools to make it that much more explainable. But I also I think that it's one of these things that folks really say, yeah, I wish this were more understandable, but they're really not pushing on it, because if they were pushing on it, it would become an issue for the insurers. And the market would speak. An insurer that said, we're going to give you a one-page plain language summary of your auto policy and why the rate went up, those folks would be in the market. So it might be one of those issues that confounds, simply because it's everyone kind of looks at it and says, yeah, you should be able to do that, but no one's sort of demanding it and making economic decisions based on it.
I also have an observation when I talk to some Australian insurers. So I ask exactly the same question: why don't you tell customers like this is the explanation, and you do this, you reduce the premium? One reason they told me is that, well, potentially that can create more complaints. So because if you make it too transparent, because it's a bit hard to fully explain, and then people could come back with more questions and more complaints. So maybe getting them vague from insurer's perspective can avoid some complaints. David?
Just a comment, and competitor pressure. I mean, if you explain all your trade secrets, the competitor will run with it.
Mm-hmm. Yeah, that's another good point. Yes?
So I want to ask a little bit more on the explainability and AI side. So I guess my view on AI has kind of evolved in terms of, I think it's almost more like just humans generally, in terms of like, if I'm thinking about the claims process, we have the adjuster and the underwriter and whatever, they have to go through the claims process, and we have issues with, say, underpayment. But in the AI space, maybe it's an opportunity to be a little more explainable and like, and maybe even help the regulators in terms of like, you could input the policy and the pictures of the damage, but the thing is, if you just say process this claim, who knows what you're going to get out of that, right? But at that point, kind of, it's on the insurer to be like, okay, these are all of the things that we have to do, and maybe it'll do that in the sense of it's easier to see what they're doing, as opposed to, I guess, from the human version, you've got your manager subtly being like, hey, and remember the bottom line when you're processing this claim. Just want you to remember, I saw the claim you submitted, but could you remember the bottom line? It's like the AI doesn't have that context unless you explicitly put it in your prompt, in which case you've triggered some issues. And so, like, maybe is this an opportunity where, like, the policies are maybe a little bit more baked in and transparent than some of these context things that happen in the human space?
I think one of the words that the technologists use a lot is telemetry. And it's this idea that as a process is executing, we can keep more information about how the process is performing and what it's doing. And all the things you're talking about are just increased detail in that telemetry. And it's one of the things we see all the time in high performance software applications. We always hear about telemetry and rocket control. Well, that's exactly why. But we're seeing increasingly that claims applications that are using AI are creating, orders of magnitude greater detail in that telemetry, and it provides exactly the explainability that you're talking about. So instead of having someone look at it and say, oh yeah, based on my experience, this looks like a claim that's going to cost $3,500 to fix. No, the car's not totaled. Okay, well, the AI is going to say, here's the existing bill, here's the bill of materials that we need with part numbers and sourcing in your local market with a price, and it's going to say the car is not totaled because ... These 4 different coordinates on the car are in alignment, and it's really just all cosmetic, and it's going to keep that information, certainly keeping that information so that we can go back and we can say, how did we reach that decision? How did we get to that number specifically? How did we do, right? Come back and say, okay, well, it actually closed here. And silently in the background looking to see, are there patterns developing in this that mean our algorithm needs to improve? All of those things are far more achievable than they have been in the past for a number of reasons. So absolutely see that.
Yeah, but it goes back to the point, explanation doesn't just mean one thing. And even just in this context, it's used in different situations. So why is, the adjuster saying it's this much to repair your car is different from, Ben's why is my property insurance rate the following? Well, it's because your credit score is low. That's an explanation. It's an accurate explanation, but what you really want to know is, well, why is my credit score driving my homeowner's insurance policy? And then you just keep going down to different levels, and then we get into discrimination and so forth. And it's a dynamic system. The more that any of this gets regulated, the more incentives get created, and the more behavior there is in response to it. So yes, absolutely. AI can and will be very helpful in providing explanations for things that weren't explained. But it doesn't really solve the whole problem. It really gets complex.
And I find it interesting that you don't think insurance companies will put directly or indirectly remember the bottom line in their AI.
Yes, great panel. I'm a marketing professor, so it's a little interdisciplinary from that perspective. Some of our colleagues look at the consumer side of the car insurance. For example, they say they have insurers also track the driving behavior of consumers, so they lower the premium. They have data support, evidence supporting that conclusion. That's a side comment. I have a question. So forward-looking 5 to 10 years from now, consumer using AI agents to shopping around when time to buy my house insurance, car insurance. So that would be an agent rather than the human consumer to doing the request and shopping around, compare the pricing, compare all those policies. And the insurers on the supply side doing the same thing. Maybe they're using less employee because save labor costs, all these kind of productivity priority of the firm, making more money, profit driven. I mean, that's legit. But if they use also AI bots to do the same function, so the match in the market, that'll be interesting. In the future, that the insurance literacy will be redefined. It's not really the human-to-human literacy anymore. So then we have to think about downstream, what's the marketing, how the bot represents the insurer, marketing or convincing the bot of the consumer, right? So it's the bot communication rather than human communication traditionally. So the regulators, how can you think about that for policy making, and also for insurers, and also for professors of us, right? What are they going to do? So I would like to hear your thoughts.
It hits on a really important point, which is that and I was just reading an article on this week, to this moment in time, the law has said the human is always responsible. So in the example that you gave, the person that gets advice from an AI, that's unleashed the bot, right, is gonna create the bargain that a human ultimately says yes or no to. And the example I heard was people that are using full self-driving in their automobiles. They're ultimately held responsible for that liability. In the same way, and insurers are definitely thinking about this, that they know that at least in the current world, if they have a bot that's serving up an offer, that will be held to a standard that kind of the company would be held to separate from the bot. So there's got to be that kind of governance and control over the offer, over the bid process, over that acceptance process, because I do think that there's nothing saying, and I'm sure others will have ideas, but at least where we currently are, there's nothing saying that's not an automated helper, advisor that makes a suggestion but is not really entering the contract.
Yeah, it's a tremendous amount to say about this, but just two really quick things. We've seen this before. So one is bot-to-bot interaction is going to have strange interaction effects. So we see flash crashes in financial markets where you've got high-frequency trading bots. That's going to happen writ large across all these interactions. And then, as a matter of market power, the company bots will restrict access to the consumer bots unless regulators step in. So we've had the technology with much simpler bots to have much more power in the consumer hands, and it hasn't happened with the internet. Technically, now it's certainly more possible, but that's probably not going to evolve that way without regulation to preserve the consumer access.
I think there's also the potential for kind of a new era of continuous shopping for these products where, Faye, to your point earlier, this has historically been a very passive purchase. You take on a policy when you buy a house, maybe when you refinance the mortgage, and you kind of set it and forget it. And insurers recognize that and price accordingly. And so in the absence of that sort of, it's a version of market power where there's insufficient search happening. You're going to flip to a new equilibrium, which is going to be maybe excessive search. And that means that you're going to write different contracts. But then to your specific context of marketing, it means the end of Jake from State Farm and the Limu Emu. And I watch a lot of sports. I don't know what the ads will be if they're not all insurance. It'll just all be gambling ads instead. The bots won't be influenced by flow from Progressive. So we'll see a new advertising regime that will have to spring up in its place.
It could. If we have the war of the bots, though, one of the things it could do is if there is a flaw somewhere in a company's pricing, for example, it's gonna, it'll take advantage of that. That probably, in circumstances could create solvency issues for the companies that we need to be careful of also.
Yes, one concern was some econ literature suggests there's a price collusion among the bots, among suppliers, there's insurers. So that will really create a damage to the consumer market.
Yes.
So the role of generative AI and agentic AI, like the agents, like you talked about, so that has been increasing in in insurance. So insurance are increasingly experimenting with it. So they haven't, in many cases, they haven't reached to some very advanced use cases. but I think they have started trying it with some low-hanging use cases. So I think the two questions here is, one is that from a regulations perspective, how do you see and there are opportunities, but their risk could be very high, in particular for these advanced AI technologies, because they could hallucinate, I think they could take actions which are not making sense, and there could be other kind of risk. So from a regulations perspective, how do you see it evolving, because there's a balance between opportunity and, I think kind of like very high risk. And then I think the other question to other panelists is that from an, insurance or practitioners the perspective, the balance has to be between, they themselves doing their own AI governance, not waiting for governance or, regulations, versus I think, of course, the compliance to, the regulations as well. So what is the role of that internal governance versus, regulation?
So I'll just say I think that not every problem has a regulatory solution. And frankly, I think what you're describing is something that the insurance industry, providing products to protect against those kind of things, is probably what we're going to get, rather than regulators creating some kind of way to handle it.
I was just wondering if there are any analogies we should draw to the debate on net neutrality, given the increasing power that will be accumulated among a set of 4 or 5 AI companies, and insurance companies having to jockey to be the #1 company showing up on an AI list of recommended companies. There's already a lot of these debates that we've had in other contexts with Google and the search companies. Do you think it's just going to be a transfer of power from the search companies to the AI companies, or is there something fundamental about AI that will be different and not lead to those same kinds of debates?
I don't think it's fundamental about AI, it's fundamental about insurance. So, net neutrality is all about platform owners who have that control and not a lot of transparency about the relationships and the ways they exercise control, and then business models where users are not necessarily paying, they're getting things through advertising, and there's different relationships, and that's what a lot, of course, can be said about net neutrality. That's what leads to these questions, that there's this systematic incentive for the platform owners to bias and restrict. We have a whole bunch of issues in insurance too, but it's a more direct exchange. I am paying for a policy, and you are pooling risks of a lot of people and making some profits on this pooled policy.
Sure. I get that, but what I mean is it's like insurer competition, right?
Yeah.
If you can pay to have a #1 advertising slot in AI, that's going to benefit larger insurance companies and maybe create barriers to entry and stifle insurer competition. That's kind of the argument that's made about search, and downstream effects on other companies.
Yeah, absolutely. No, and I guess I wouldn't just call that net neutrality. We have competition policy and market power and consumer protection issues, absolutely, in this industry as every other one, and we're struggling with that for all these different reasons. Partly the political problem of getting the mechanisms to deal with it.
Cool, thank you. And because of time, we can continue the conversation during the coffee break. And please join me thanking our panelists.